Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Russia, one of the world's largest wheat exporters, is considering a formula-based tax on the wheat it sends abroad from June 1, a month earlier than previously stated, two sources familiar with government talks told Reuters on Saturday. Moscow is attempting to reduce wheat exports to help curb rising domestic food prices after President Vladimir Putin criticized food inflation amid the coronavirus pandemic. It has already said it would impose fixed tariffs, set at €25 $30 per ton for February 15 to 28, rising to €50 per ton from March 1 to June 30 on wheat exports, but this was just a short-term measure and it has said it planned to switch to a more complicated formula-based regime on July 1.
Canada, the world's biggest canola grower, is running short of the oilseed 6 months before the next harvest, with strong export demand driving prices to nearly 13-year highs last week. Supplies of major commodity crops are dwindling worldwide as buyers hoard food supplies during the COVID-19 pandemic. China is loading up on grains and oilseeds that it can feed to animals, raising food inflation and causing some nations to restrict exports of their crops. Canola, known for its bright yellow flowers, is crushed mainly for oil to make French fries, mayonnaise and salad dressings. Its meal is also fed to livestock like pigs.
Moving on to the top news in the energy sector.
Russian oil and gas condensate output has increased by 120,000 barrels per day, BPD, to 10.16 million barrels of oil per day in January from 10.04 million barrels of oil per day in December following a global deal on output, two sources familiar with the data told Reuters on Monday. Russia had said it would raise its production by 125,000 barrels of oil per day in January, so the increase is broadly in line with expectations and below the scale of the ramp-up in the first half of the month.
Mexico has received $2.38 billion from its annual oil hedging program, its finance ministry said on Friday, compensating for some 80% in lost oil revenues after the coronavirus pandemic sent crude prices tumbling. The 2020 payout, only the fourth since Mexico began hedging regularly in the early 2000s, acts as a lifeline for an economy pushed deeper into recession by the pandemic. The hedge, the world's largest financial oil deal, is designed to protect Latin America's second-largest economy against oil price crashes. In previous years, Mexico has spent about $1 billion on the insurance policy. Next, we have the top news in metal markets. India slashed import duties on gold and silver on Monday in a surprise move that industry officials say could boost retail demand and curtail smuggling in the world's second-biggest bullion consumer. Higher demand for gold from India could support global prices, which hit a record high last year, although that could increase India's trade deficit and weigh on the ailing rupee. India cut import duties on gold and silver to 7.5% from 12.5%, but imposed a 2.5% cess, a separate tax, on the imports, Finance Minister Nirmala Sitharaman said.
Silver ETFs and mutual funds saw their biggest inflows in 5 months in January, according to Refinitiv Lipper data, as retail traders rushed to buy the metal in a bid to emulate last week's surge in bets on video game retailer GameStop. An analysis of 28 global silver ETFs and mutual funds data available on Lipper showed they received an inflow of $1.8 billion in January, the biggest since August 2020. iShares Silver Trust ETF, the largest silver-backed ETF, recorded an inflow of $1.2 billion in January, out of which $780 million came in the last week, the data showed.
We will now look at the top news in the agricultural sector.
Strategie Grains has increased its forecast for rapeseed imports into the European Union and Britain in the current 2020-21 season by 800,000 tons to a record 6.7 million tons, the consultancy said in an oilseed report. The sharp upward revision from its previous outlook in early December reflected attractive crushing margins that were fueling demand in Europe, and also a bumper Australian harvest that was offering short-term availability, Strategie Grains said. Vegetable oil prices have rallied in recent weeks due to supply concerns and brisk demand from countries like China, making it more profitable to process oilseeds. That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.